It's kind of exhausting keeping up to date with what's happening in the US-China trade relationship, but we have heard that this new round of tariffs will come into effect on September 24. How do you invest, I guess, in an unknown environment like this, and what are you telling your clients?
Yeah, no, it's certainly heating up, this whole subject, and if it plays out as people fear, it's obviously going to hurt China, unemployment, it's going to hurt the profitability of US companies. But I also think there is a scenario that we are maybe not giving enough credibility to, and that is that there is sort of de-escalation and that there is a reset of the trade relationship, but that the world can, continue to do well as it has been doing, because ignoring the emerging markets for a little bit, the overall world has been growing at 3.5%, and we sometimes forget when we get overwhelmed by all the headlines on the China trade, or the China-US trade dispute.
And you're also looking sort of 5 to 10 years ahead in terms of your investment strategy. So what areas are you looking at? What does the bank like at the moment?
Yeah. Fundamentally, our business will continue to grow because the world will keep growing, and also, importantly, international flows will keep growing. Just to give you an idea, planes, 22,000 commercial planes today, will be 48,000 in 20 years. So just an indication of how the world will continue to become more global. And that's what we're doing in corporate banking. We're serving companies for their financial needs around the world. So we'll keep investing, and I would say the two areas we're doing that predominantly in is in our payments business, and also, obviously, we've got to get China right.
How do you get China right in this environment?
China, I think you've got to lean forward. It's such a once-in-a-lifetime sized opportunity that I think we have to lean forward in terms of investing. So it's about people, it's about capabilities, and just sticking with it, notwithstanding some of the ups and downs that the market may have.
Now, you are based in Dubai, and we recently saw JPMorgan among the banks that lent $11 billion to Saudi Arabia's sovereign wealth fund. This is a deal that was bigger than initially planned, so we saw quite a lot of interest coming through from the banks. Is it becoming more typical, I guess, to start to see syndicated loans to sovereign wealth funds? Is that going to be a trend that we see continue?
Yeah, I don't think we've seen it that much, but you're right to say that the PIF has just raised $11 billion. I think a lot of banks see Saudi as a tremendous opportunity, given, you're talking about a country that is, that's probably no example like it, that is trying to transform itself, and that's going to come with a lot of opportunities. So there's a lot of banks that want to play, and the PIF has a lot of investments to do internationally. They've talked about that. They have a tremendous asset base with domestic assets, about $200 billion. So to borrow some money against that makes perfect sense.
So what other areas are you looking at in EMEA?
Well, I think emerging EMEA is a growth area for us as well. From Russia down to South Africa, that is a region that maybe is not talked as much about as Asia, for example, but it does include 2 billion people, 90 countries, 60 to 70% of the world's oil reserves. So it is a place where we also see a lot of growth.
How worried are your clients? I mean, you sound fairly bullish about the overall global economy. You were talking there about the global growth that we're seeing of above 3%. But when you talk to your clients, how worried are they about the headlines, the day-to-day moves that we are seeing, not only amongst the China-US trade relationship, but what we're seeing in EM as well?
Yeah, I think in the corporate bank we talk to CFOs, treasurers, and they obviously need to manage the risks they have, whether it's FX, commodities, rates, funding. So there are a number of things that they really have to keep a close eye on, and this sort of volatility generally they obviously don't like. I think the one that stands out for me is sort of the funding picture and how the capital markets will stay open or not in the various scenarios that we may see in this unfolding of the US-China trade dispute.
Are you worried about a liquidity crisis?
Well, the bond markets, broadly defined, have grown tremendously. Because of the quantitative easing, it's gone from 27 trillion to 57 trillion. So there is an enormous amount of tradable bonds out there. And at the same time, the bank community is probably less incentivized and equipped to take risk due to regulation. So you could indeed see a market where people lose faith, they're sellers, and there won't be as much of a floor to buy these bonds. So I think you will see periods of where markets will close. And I think for CFOs, treasurers, it's very, very important to make sure that funding they're thinking well ahead and are prepared for markets like that.
There's been quite a bit of retrenchment coming through in corporate banking. Where are you seeing opportunity in this space to, I guess, try and get some market share amongst some of the woes, I should say, of some of your competitors?
Yeah. Well, global banking, being present globally is a difficult game, and I think we think we'll be one of the end game winners, but there will be fewer than I think we would have thought 5 years ago or 10 years ago, because a number of banks have indeed retrenched towards their home market. And there are very strong competitors there, but connecting the global dots, only a handful of banks will be able to do. So we're actually very hopeful that we will play an important role in that. And as mentioned, I think the thing we need to get right is China, but also the payments business. That is really the plumbing of the corporate world, and as banks we need to play an important role in that.
So how are you going to do that? What's your strategy in that payments business?
Well, it's all about innovation. I think we are pretty much a technology company. We have 250,000 employees globally. 50,000 of those are involved in technology. We spend $10 billion a year. So now, but that doesn't mean necessarily you're successful. You got to spend it in the right way, develop the right tools, and so we're working hard on that, seeing what our clients need to become and to stay one of the preeminent players in the payments business.
Now, we saw Jamie Dimon take on President Trump a couple of weeks ago. He's walked back those comments. What do you think was going through your boss's mind when he said he could win the next election?
I can't comment on what goes through Jamie's mind, but I can comment on the fact that he's been an amazing boss. He's led this company for 15 years. It's a company worth $380 billion, kicking out $25 billion of net income. So he's been an amazing leader, and he's made a series of very good calls on this company. And he also has a very long-term view. And for the corporate bank, that's very, very helpful. I don't need to explain to him what we're doing the next 3 months. He wants to know what we're doing the next 5 or 10 years.